Welcome to MBA Now. I'm Rob Van Raphorst. There's a lot happening in the housing market, and here to talk about MBA's latest economic forecast is our chief economist, Mike Fratantoni. Mike, thanks for being here.
Thanks, Rob.
Mike, why don't you give us a brief summary of what you're seeing?
Well, we are continuing to see what really is a strong job market. So if you looked in the April jobs report, 160,000 new jobs, unemployment rate at 5%, and we're beginning to see a pickup in wage growth. This is a very, very strong tailwind for the housing market. You see what that's been translating to in our weekly application survey. Purchase applications are running 20% ahead of where they were last year at this time. So really supported by that stronger job market and also by some really favorable demographic trends that we're tracking.
Mike, there's been a lot of talk about interest rates on the overall economy. What effect is this discussion about interest rates and the possibility of rates rising having on the housing economy?
Well, based upon that job market improvement that I mentioned and the fact that inflation's beginning to pick up, we think the Fed's likely to increase short-term rates probably twice this year and then accelerate that pace of increases over the next couple of years. Now, that certainly is reflecting the strength in the U.S. economy. But globally, growth has remained really quite weak, and that's put downward pressure on our longer-term rates, including mortgage rates. So last week in our survey, we were at about 3.9% for a 30-year mortgage rate. We think that's only going to increase to about 4.2 by the end of the year, so still really quite affordable. So we think rates are likely to rise, reflecting the strength in the U.S. economy, but not enough to really knock this strong purchase market off of what has been a really very positive trend.
There's also been a lot of talk about a possible recession and the fact that we may be headed into one. Do you think that we are, and what effect would that have on the housing economy?
So we think most likely the U.S. economy is going to continue to grow 2% or so over the next couple of years, so not terribly robust growth, but growth nonetheless. Now, we have been tracking a couple of trends which make you worry a bit more, particularly with respect to the energy sector. So if you looked at oil prices, they dropped from over $100 a barrel to below $30 a barrel and have only begun to recover. And we're seeing within the U.S., think of an area like Oklahoma, Louisiana, North Dakota, very, very exposed to the energy sector, beginning to see some job loss and some weakness. We think if we got into a recession over the next year, it would really be led by some of those losses in the energy sector. Don't think it's the most likely outcome, but it certainly is a risk that we're tracking.
Great. Thanks so much for stopping by and talking all about this with us. Remember to follow us on Twitter at MBA Mortgage or like us on Facebook at the Mortgage Bankers Association. Thanks again.